enough for the power sector, and therefore the electrical sector got badly impacted during that time. Of course, the electrical sector is also very dependent on exports, so we had the exports quite badly affected. At the same time, imports increased. So I think it was something to do with little bit of everything.
Sure. Roopa, correct me if I'm wrong again, but I believe almost all the SMEs now have to be rated by rating or need to get a rating, if I'm not wrong, for fundraising, so on and so forth. Assuming that even if that is not the case, I believe you have 7,000 odd companies under your SME segment which are being rated. What do you look out for in terms of the financials? Because, you know, a constant complaint that we get from a lot of corporates is that small companies in particular, they do not have clear understanding of what needs to be showed up, how it needs to be showed up, so and etc. What would tilt the balance positively for some of these SMEs?
You know, you're right. We have ratings on our traditional rating scale, which is the AAA, AA scale, on 4,000 companies. In addition to that, we have a customized scale for small and medium enterprises under which we rate about 11,000 companies. This is the fourth year during which we are assigning ratings to the small and medium enterprises. And mind you, a lot of these companies are in the SSI sector. The stories that we've seen there are truly amazing. I think the way the entire sector has responded to the slowdown is very, very different from what we saw during the time of the last downturn. And what do I mean by that? Clearly a difference in 3 or 4 aspects. One is in the way they did not stuff the channel with inventory, unlike the last time. So very, very quick to curtail production, number one. Number two, a very tight control over working capital. Maybe this came because of the fact that there was the first half of last fiscal when the banks were circumspect about lending to the sector, and maybe it was imposed on them from outside, but nevertheless it happened, and it was very impressive for us to watch. The third thing they did was they preserved liquidity, as Dr. Mitra said. And the fourth thing, which I think has really been truly very insightful to us this time, is the flexibility. You know, these companies actually quickly moved customers, quickly shifted markets, etc. And I think because the effort or the response was so strong and so concerted, it resulted in the confidence of the banking sector coming back very quickly, which is why you saw the credit growth pick up in the second half of the year, and which is why the numbers overall on a year-to-year basis that you talked about do not reflect as much of a dip. But there is a very big difference between the first half of the year and the second half of the year, and I think what you saw in the second half and the way banks responded was thanks mainly to the speedy and very effective response by the smaller and mid-sized companies in the first half of the year.
Great. You want to respond?
Sure enough. In fact, I agree completely, but I think the point being made was that for our purposes, this thing did not even last for a year, which is very creditable. I mean, all the stakeholders, the companies themselves, the financial institutions, everybody probably responded in a manner which was mature, which was very innovative, and which gave us results. I totally agree.
Sure,
I think
but
that's,
you know, Puneet, the point is, this is not over by any means. I mean, while the data suggests in the last 9 months that yes, things have been fairly good, there is a problem of rising inflation, if you will. Commodity prices are rising and companies are hurting. They have admitted openly that that is the case. There is talk of interest rate hike, which in all probability would happen. For the SMEs, the base rate also coming into play would mean that their cost of funds will go up. What does a small company do in this case?
Well, first of all, I think the future is going to be different from the past because the surprise element is no longer going to be there. We actually had an air of invincibility around corporate India, or corporates generally, because the economy was growing quite at a fair clip, and almost every asset class was appreciating in quite a nice way. And suddenly, it was almost like things came to a standstill. And the suddenness with which the pace of growth actually started to decline caught a lot of people unaware.
Sure.
They weren't very sure. Some were in denial. The others felt that this was a transient or a temporary phenomenon. The third felt that there would be intervention that will actually address the issues. I think today, if we had a similar situation, we would be probably, or corporates would be much better prepared to handle a situation like that, because it's almost like a general having been through battle. You know, it's battle hardened. When you're going to go back through the whole process, you're going to rely on the experiences that you've had in the past, and you also will have the confidence with which you have addressed those issues in the past, which will help you tackle the issues that are forthcoming in a more confident manner.
Mr. Gupta, you agree? I mean, my simple point is, looking at the nature of your industry, the rising steel cost, for example, would have impacted you, right? And you are of a size, excuse me if you will, but you are of a size wherein the customer, in your case, whoever it be, is probably the one which dictates the terms.
Yes.
How do you get impacted as a result of these things? Are you better prepared?
I have seen,
and I'm sure you are, but does it still impact you?
I have seen over last 30 years that although there is no clear agreement on escalation of prices by the customer, but normally companies like Tata's and Ashok Leylands and all these companies, they do consider the price increase and we may not get 100% price escalation, but 80-90% is definitely covered. And the main crux is whether our volumes go up or not. That reduces our overhead costs, and that only improves the bottom line. So we are not really very worried about the raw material prices as much as the demand and the quality. If our quality is the best and we are able to maintain the schedule demanded by the customer, I think all other things find its own level.
You should have been a listed company. A lot of investors would have been happy to hear that, because most companies are telling otherwise.
Well, my experience is this, because I have grown from very small entrepreneur to this level.
Yeah, Roopa, you were making a point.
I would agree with Mr. Gupta. I think our assessment also is that given the current environment, the pickup in demand is there. Salaries and incomes across the board have gone up very smartly in the last 6 months, definitely. So the purchasing power is definitely there, both in the urban areas as well as the rural areas, amongst the white collar and the blue collar. So the ability to pass on the increased commodity prices is certainly much, much stronger than it was 12 months ago.
But having said this, I would like to put a small query to Mr. Puneet on this loan thing. Sometimes we feel that in bad times, you are not in a position, you don't want to give money to those who require, and you are able to give money, you want to give money to those who don't require.
I think Puneet answered that.
I mean,
well,
Puneet did answer that.
I think what you have to recognize is the banks have a liability and an asset liability function to manage as well. And you are certainly going to provide assistance to companies that in your wisdom are in a position to repay some of that quickly if you think there is a requirement for us to raise liquidity, whether it's from our depositors and such like. Banks also tend to be quite risk conscious, I think. And when you are going to find, I think it's fair to say that if there is a very clear indication to a bank that the project is actually going to proceed as envisaged or as expected, then I doubt very much whether you'll find banks hesitating. But when there are linkages, when there are dependencies which are probably difficult to spot or rely upon, that's when the hesitation creeps in.
I would like to add something to what he said.
Sure. We're running short of time, so we'll have to make it quick. But please.
You know, the fact is that if the small and medium enterprises had access to the funds at that time, then perhaps the crisis would have been much bigger today. Because they did not have access to the funds, they had to downsize themselves. They had to do things which were innovative. So, it's actually helped in balancing the crisis. Otherwise, you might have landed up with something far bigger, a lot more non-performing assets if you pumped in a lot of capital into the market.
That's hindsight, that probably a quality that only politicians are born